Hi there traders and welcome to the daily recap show for today, which was Monday the 12th of December. So please, if you haven't already, come sign up to the Keyzone service. It is completely free. The link is in the box below on our YouTube channel. This will become a subscription based service in the new year, but you'll get orders free, the special offers, and you can still get to come and join the Keyzone traders community completely for free at the moment and take advantage of these reports before the market opens. So looking at the European session, these were our zones of reference on the FTSE. We said that the FTSE was still retracing correctively on the higher timeframes, which was causing some unclean price action. So we said that initial resistance was at 74.66 to 74.72. And that support comes in at 74.27 to 74.35. So let's go and have a look at the FTSE today. Okay, so as you can see, we said that the FTSE was creating some unclean price action, and that continued today. We just chopped around very early on, nothing into the zones that we mentioned in the report. We did come up and we tested that initial resistance at 74.66 to 74.72, but nothing really here, certainly not in terms of my trade plan to get in. Notice how the price action is very corrective, very messy, nothing really clear. I guess this one here is potentially the only real proper signal there that I see where we've grabbed that liquidity before. It's a nice reversal down. If you had taken that trade, then this would have been a losing trade if you'd had the tight stop above there. There wouldn't really been any need to have a wider stop, in my opinion, because we'd already grabbed the liquidity and we'd seen the signal from the initial resistance. So if you had taken this one, I think the tight stop would have been valid and this would have been a losing trade. This one here, although it is another valid reversal signal in terms of the pattern because we've grabbed this liquidity, it would have been back into this zone, so I don't think that would have been wise. I think it would have been too risky. So maybe this would have been a trade which would have been a losing trade. We then came down. This here is a sort of continuation of sorts of the false break pattern. That probably is the only other signal really that I can see. And then after that, we've got just a lot of choppy stuff that is not in anywhere near the zones that we were looking for trade locations for. So nothing really clean on the FTSE today. Like I say, maybe a couple of opportunities there. One loser, one which would have been a nice winning trade. So that's the FTSE. Now let's go and take a look at the DAX. Right, so on the DAX, we said it developed a small range with resistance at 14,370 to 14,390, and we said the bottom of the range was at 14,195 to 14,215. So let's go and have a look at the DAX. Okay, so this is going to be a very, very quick report on the DAX today. As you can see, we have literally not touched any real zones of reference that we mentioned in the report. We've got very close to touching that initial resistance up here at 14,370 to 390. Maybe that might be adjusted tomorrow, but nothing really in terms of reversals there either. And the rest of the time we were just chopping from in and around these minor zones. So nothing to do on the DAX. The FTSE offered a couple of opportunities. To be fair, the zone actually worked on the FTSE as the initial resistance, but it wasn't very clean. But not really too much, certainly nothing too high probability on the European markets and the European session today. Sometimes you get like that. We do have quite a big week of news ahead. We've got a lot of rate announcements from the Fed, the Swiss, the Bank of England, and the ECB. And also we've got PMI, flash PMI, coming out on Friday. So a lot of news later on in the week. Maybe that's going to have an impact on the price action. We'll see as the week progresses. But we'll be back tomorrow with our reports. I hope you had a great day, and I'll speak to you again soon. Cheers.